The Oracle of Omaha. When he moves, well, the financial world holds its breath, doesn't it? Waiting to decipher the whispers of his strategy.
It really does.
And today we're dissecting a fascinating piece. It interprets Warren Buffett's latest 13F filing, not just as, a portfolio update.
No, much more than that.
Exactly. But as a chilling, hidden warning, signaling some deep market fears, particularly around the US dollar and, well, government debt.
A pretty bold claim to start with.
Right off the bat, the material cleverly hooks us with this idea, this hidden warning from Buffett. It immediately promises a deeper read into his recent 13F. But as we unpack it, how effectively does that hidden aspect truly feel like an unearthed discovery? Or is it more like just a powerful opening statement?
Yeah, that's clearly laid out. I mean, the title, Warren Buffett just sent a hidden warning, it creates an incredibly intriguing hook. It definitely draws the reader in, with the promise of uncovering something profound.
It works, yeah.
But the subsequent explanation, it shifts pretty quickly to a direct interpretation of, well, publicly available filings and statements.
Ah, okay.
So that creates a slight narrative tension, I think, where the hidden aspect feels less like a mystery we're solving together.
Right.
And maybe more like a strong rhetorical opener for what turns out to be a very clear, direct analysis.
So the weakness there is?
The weakness, I'd say, is that the initial intrigue of hidden isn't fully sustained because the information is largely presented as a straightforward deduction from public data. It doesn't feel like a deeper interpretive act throughout.
That's a really sharp distinction you're making there about the hidden element needing to be this interpretive act. It immediately makes me wonder, though, how do we as authors guide the reader towards our interpretation of hidden without it feeling, like we're imposing a meaning that isn't inherently there? How do we build that bridge?
Well, to strengthen this, I think we need to weave that hidden element more deeply into the analysis by framing it as exactly that, an interpretive act.
Okay.
Not the revelation of some actual secret. So the suggestion for improvement is to really emphasize how these seemingly public details, when you view them through the unique lens of Buffett's history, his commentary, his specific adjustments, that massive cash pile.
That huge cash pile, yeah.
How that reveals a conviction or a strategy that, frankly, most investors might just overlook.
Ah, so it's hidden because people aren't connecting the dots.
Precisely. It's about making the warning hidden in plain sight, but only for those who don't connect all those dots. You're providing that exclusive insight you promised up front.
Got it. So it's less about finding a secret memo and more about showing the reader the pattern that others miss. What would that look like in practice? Can you give us a concrete example?
Sure. So, for instance, instead of just stating, Buffett is clearly positioning his portfolio for something big.
Which is a bit vague.
Right. You could say something like, what's hidden here isn't the 13F filing itself, but the profound implications of Buffett's consistent selling streak, 11 straight quarters now, and his historic, $134 billion cash pile.
Okay, yeah.
This isn't just routine trading, it's an unmistakable, actionable signal. And for a man who often says very little, it speaks volumes about his long-term outlook. See how that rephrasing elevates the significance?
Definitely. It frames the interpretation as the key.
Exactly. Or when discussing his buys, you could highlight how the hidden genius lies in selecting these specific asset-heavy companies. Not just any, but these ones as a hedge. And maybe not against an obvious market crash, but against the insidious long-term erosion of currency value, a threat that, short-term focused investors often dismiss.
That works.
This approach makes sure that narrative promise, that hidden warning, resonates throughout the whole analysis. The reader feels like they're gaining an exclusive insight with you, connecting the pieces, seeing what others don't.
I love that. It's about providing the aha moment for the reader, not just, reporting the facts. It really deepens the understanding of why it's a hidden warning.
Precisely.
Okay, so moving on from that core message, the piece then tackles the critical task of translating Buffett's playbook for the individual investor. That's kind of where the rubber meets the road, isn't it?
Absolutely.
How well does it truly empower someone who's operating on a vastly different scale?
Yeah. Building on that point, while the material quite rightly, cautions against just blindly copying Buffett's trades.
Which you can't really do anyway.
Exactly. And it acknowledges the huge difference in scale. But the advice for the individual investor, it could be further enriched.
Okay, how so?
Well, the weakness here is that the suggestions for personal application, things like build cash from income or lean more into these capital-heavy businesses, maybe 5 to 10%, they're quite general.
A bit high level.
Yeah, maybe a bit too high level. They might not fully address the nuances of how a retail investor, working with much less capital, different market access, how they genuinely translate a billionaire's unique position and that long-term vision into their own portfolio. The reader, especially an expert reader, is looking for a more sophisticated bridge.
That's incredibly important. I've seen so many articles try to distill these billionaire strategies, and they often end up with advice that's either, like you said, too vague or just not really applicable for the average person.
Mm-hmm.
So how do we make Buffett's wisdom genuinely actionable for someone without, Berkshire Hathaway's balance sheet?
So the suggestion here is to provide a more diverse, maybe a more scaled set of actionable strategies. Strategies that delve deeper into the principles behind Buffett's playbook.
The principles, not just the moves.
Exactly. Value, tangible assets, strong cash flow, avoiding the hype. Things like that. But tailor it for investors with varying capital amounts and different risk profiles.
Right.
This would help the listener internalize the philosophy and adapt it to their own circumstances rather than just getting sort of a diluted version of the actions.
Okay.
It's about empowering them to think like Buffett within their own means, not just act like a tiny version of him.
That's a powerful distinction, thinking like Buffett versus just trying to copy him. So what would a more granular, principle-based approach look like, say for someone with maybe a few $1,000s, not billions?
Okay, good question. For example, instead of that blanket lean into asset-heavy businesses, you could explore something like, for an individual investor, this might mean researching dividend-paying infrastructure funds, perhaps. Or maybe looking at real estate investment trusts, REITs, focused on industrial or essential services.
Things people can actually buy? Right. Or even exploring commodities-focused ETFs, but crucially, while applying a similar value at a discount lens to their entry points. That connects it back to the principle.
Okay, that's much more concrete.
And regarding building cash, you could expand on just setting some money aside each month. Maybe suggest, beyond basic savings, individual investors can emulate Buffett's dry powder idea by using things like high-yield savings accounts or short-term treasury bills, maybe money market funds.
Right. Practical tools.
Yeah, tools to maintain liquidity and maybe fight inflation a bit while waiting for opportunities. Much like Berkshire's own cash and treasuries pile, just scaled down.
Okay.
These are specific, accessible mechanisms for achieving the same strategic goal as Buffett, but tailored. That adds significant practical value, especially for an expert audience. Wow, that distinction about scaling Buffett's principles, not just his actions, for the individual investor, is incredibly powerful. It really makes me think about how often I've seen that kind of diluted advice. What's the biggest mistake, do you think, people make when trying to apply a billionaire strategy to their own much smaller portfolio?
The biggest mistake? I'd say it's often ignoring the time horizon and their own liquidity needs compared to someone like Buffett.
Ah, good point.
He can literally wait a decade, maybe longer, for a thesis to play out. Most individual investors, well, they often can't afford that luxury, or they have very different cash flow requirements.
Totally different constraints.
Exactly. So scaling isn't just about the dollar amounts. It's also about understanding the practical constraints and, frankly, the opportunities that a retail investor faces. It's about finding accessible entry points that align with their personal financial goals, which are just vastly different from a multi-billion-dollar conglomerate.
That's a fantastic point about time horizon and liquidity, a nuance that often gets missed. Okay, so the material makes a strong case for Buffett's long-term views by highlighting his fears, especially around inflation and the dollar. But it also briefly touches on alternative economic outlooks. It references figures like Fed Chair Jerome Powell and Goldman Sachs.
Right. It does mention them. But, could the evidence also support a different conclusion? Or maybe at least
a more robust exploration of the implications if those differing views turn out to be correct.
What do you mean exactly?
Well, the weakness I see here is that while these opposing viewpoints on inflation are mentioned, like Powell being cautious on rate cuts or Goldman Sachs projecting a September cut,
Yeah, they're in there.
they are, but they're presented quite quickly, and then almost immediately they're sort of overshadowed by a return to Buffett's primary long-term concern.
Okay.
And this, I feel, misses an opportunity to model a more comprehensive risk assessment for the listener, which, would be crucial for someone with deep expertise who's trying to build a really robust investment thesis.
So it's like the counter-arguments are treated almost like footnotes.
Yeah, something like that, rather than integral parts of a balanced analysis.
I can see the desire to focus on Buffett's perspective, given the premise of the piece, but ignoring or at least kind of downplaying significant counterarguments, it seems like that could undermine the robustness of the whole analysis, couldn't it?
I think so.
Is there a risk that by not fully engaging with these opposing views, the piece might inadvertently present a somewhat one-sided picture, especially to an expert audience who really values comprehensive thinking?
Absolutely. I think there's a risk there. So the suggestion for improvement is pretty straightforward. Dedicate a bit more analytical space to explicitly considering the so what.
The so what if the others are right?
Exactly. What if the counterarguments, particularly around inflation cooling off, actually materialize? What does that mean?
Okay.
Doing that would demonstrate a more nuanced understanding of market complexities. It strengthens the overall strategic advice because you're offering a more complete picture of potential market paths, not just the single one Buffett seems to be betting heavily on.
Right.
It empowers the reader, the sophisticated investor, to think critically about multiple scenarios.
Which is crucial.
That's fascinating. So it's not just about mentioning them, but actively grappling with their implications. What are some ways to bring that grappling, as you put it, to life for the reader? How do you show that wrestling with ideas?
Well, to give a concrete example, when you mention Powell's stance on not cutting rates yet, or Goldman Sachs' September projection.
Yeah, you could actually pose some questions, like, what are the potential limitations or, counterarguments to Buffett's idea if inflation does cool off quickly, as some expect?
Asking the reader to think.
Right. Or, how might his hedge of tangible assets actually perform in a sustained disinflationary environment, especially if central banks pivot to rate cuts and stimulate growth in totally different sectors?
Interesting angle.
And then you might suggest something like, for the discerning investor, maybe it's not about choosing between Buffett's view and, say, Goldman Sachs' view.
But
But understanding how to position your portfolio if either scenario starts to gain momentum. And then you could introduce concepts like maybe exploring barbell strategies.
barbell strategies? Explain that a bit.
Sure, like having some exposure to those inflation hedges Buffett seems to favor, but also maintaining some growth-oriented investments. You're essentially hedging against different future realities, not putting all your eggs in one basket,
That barbell strategy analogy is fantastic. It's like, not betting everything on red or black, but spreading your bets a bit to cover different outcomes.
Exactly.
It truly models that critical thinking we want to see. That approach really highlights that even if you lean strongly towards one view, you still need to acknowledge and ideally plan for the possibility of other things happening.
It makes the strategic advice much stronger, much more robust.
Definitely. Okay, so we've covered some really key areas today. We focus on how to refine that narrative flow around the hidden warning.
Making it more about interpretation.
Right. And enhancing the actionable strategies for individual investors, making them more principle-based and scaled.
Getting beyond the general advice.
And finally, deepening the engagement with those differing economic perspectives, really grappling with them.
Yeah. Remember, the goal here is always to make your work as robust and impactful as it can possibly be. So, by really considering how that hidden warning can be more deeply woven into the narrative, using those interpretive insights,
Right.
by providing even more granular, more adaptable strategies for the average, albeit sophisticated investor,
Yeah.
and by more thoroughly engaging with those crucial counterarguments and really thinking through their implications, well, your piece can offer an even more comprehensive and, I think, compelling analysis.
That makes a lot of sense.
And look, we genuinely want to help you strengthen your material and develop your skills. So we absolutely invite you to submit your work back in for further feedback, after you've had a chance to maybe incorporate some of these suggestions.
Excellent. Some really actionable points there.